Like we're going on air. Hello, everybody. So great to see you all. Thank you for joining us for our last Money Talks of the year. I cannot believe it. I feel like it's still summer. Michelle, it looks like you're still in summer.
Kind of. We're kind of like in our cooler part of the year where it just rains in Miami.
Oh my gosh. Well, we are thrilled that all of you are spending some time with us today, and we want to get to know you all better. So please take a second and follow us on Instagram. We are at Rock Paper Coin, and Michelle is at Be Sage Always. And also introduce yourselves in the chat. Tell us where you're calling in from so others can follow you as well. So drop your Instagram handle, leave all the questions, and we will answer towards the end. So let's dive right in. Michelle, thank you so much for joining with us today. I got to know Michelle kind of through the speaker circuit, and she has become a friend and someone that I respect that's really doing great things for the industry. Michelle was there for my first conference I ever spoke at in Florida,
Oh, yeah.
and was just so welcoming and wonderful. And we've just been friends since. So, Michelle, you have been in the industry in many different ways. So, tell us about you and your business and what got you started.
Yes. So I'm the owner of B-Stage Consulting. We do financial strategy and business planning consulting for the most part, wedding and event business owners. And the way I got into this was way long ago. I studied accounting. I have an accounting degree. I went to go work for Deloitte, one of those big four firms. In 2004 is how I got into the industry. That's when I started invitation design. Like many of us who have artistic passions that turn them into businesses, I did exactly that. That was 20 years ago. And then in 2009, I started writing a business blog for the industry. At that time, there was very little, if any, education for business owners on the business side of weddings. That blog became an educational platform and really kind of launched me into the consulting side of business and events. So we're about to celebrate 15 years this spring,
My
which is
gosh.
crazy. Yeah, I know.
Congrats. That is
Yeah,
huge. I love it. And I
huge.
love that you have experience in the wedding industry. Like you got your hands dirty. So you truly understand the needs of wedding and event professionals, which I think is
Yes,
so unique between you
yes.
and other people doing what you're
Well, and
doing.
I always say, I'm like, okay, so initially that was really valuable, but in the last 15 years, it's been all of my clients who have educated me because, you know, case study of one invitation business isn't as valuable as me being able to say
Right.
like rental business and right. So yeah, so that's where my
Totally.
expertise comes in. Yeah,
Totally. Okay, let's dive in. I have lots of
do it.
questions for you, and the questions are starting to come in. So discussing finances in general is just such a sensitive topic. And why do you think that is? Like, why is it so touchy? And how can people
Yeah.
really change their mindset about it?
I think there's a few things. I think people associate accounting and finances with math, and many people had math PTSD growing up, right? Like you may not have liked your math teacher, or you may not have liked algebra and calculus, and that kind of was the first paving stone at this like nervousness about talking about numbers and money.
Yeah.
The thing is, like, we're for the most part all creatives. We didn't come from an analytical background. We may never have gone to business school. Most of my clients didn't go to business school, so you didn't get that like accounting
Mhm.
101. So anytime something is foreign, you're gonna, kind of stand back from it. Like there's certain things that are really foreign to me that like I don't even really want to touch with a 10-foot pole. So I think that that's how people kind of look at accounting and finances. And when you start a business, you're not thinking, oh, I'm going to start a floral design business because I want to really get strong at doing QuickBooks. Like nobody says that, not even if you have that background, right? So you're just kind of thrown into it as a business owner because you have to
Right.
survive, but you weren't really thinking of that when you wanted to start a business based on creativity and art. Yeah.
Got it. Now, there are so many financial terms out there that it's super easy to get overwhelmed. So let's just start with the basics. What is financial strategy and why is it important?
Yeah. So financial strategy breaks up into three parts. Okay. So you want to be thinking about your bookkeeping, your accounting. This is your record keeping, right? And so what has happened in your finances in the last month, in the last 3 months, in the last year, all of that goes into your bookkeeping. And so you'll have a system, you'll have a tool, probably like a spreadsheet or QuickBooks to help you track that. A lot of us as business owners, we're doing our own tracking, whether we are good at it or not. Or sometimes when you get established in a business, you may have a bookkeeper that you hire to help that, right? So that record keeping tells you what the history of your business is. How well did you perform last month? How long did you perform in the last year? That data is important so that you can make decisions moving forward, okay? So that's number one, the number one piece of your financial strategy. The second piece is tax. For the most part, as business owners, we're not too involved in the tax strategy piece. We hire tax accountants to be the experts in this. But there are some fundamentals that can help as business owners, knowing what your, business write-offs are and things like that, which we'll talk a little bit later about, I think. It can help you drive the conversation with your tax accountant. So even though you hire this tax accountant, you're ultimately still in charge of your finances and communicating those things to your tax accountant. Okay, so that's the second area of your financial strategy. The third strategy is your planning, your budgeting, your sales goals, your forecasting, your cash flow planning. All of those things wrap up into the future of your business. So you're taking your bookkeeping, your history, and you're using that information to look and say, hey, last year I did $1 million in sales. What do I think I can do this year in sales? How is my business changed? How's my pricing changed? And you can build financial plans based on your history. So that's how you want to be thinking about your strategy. And the reason why I break that out is because a lot of times people think it's just the bookkeeping or your tax account. You may have hired them to help you. No, there's 3 different pieces and you need to think of them independently on how you want to approach each one of those 3 arms to kind of have a full comprehensive financial strategy.
Got it. Got it. Okay. So as business owners, we wear a lot of different hats. What is your current role in your business and what does that look like?
Well, I'm the one that wears all the hats because it's primarily me. I'm a business owner of one, and there's people that I contract to help me with certain things, but for the most part, it's just me. I look at myself, any business, I think any business owner really needs to think of themselves in 3 roles for the most part, right? You're the worker bee, you're the one that is doing the work. And when you start your business, let's use the floral designer as an example. You start because you love making flowers, right? And so you really are that worker bee. At some point in your business, you usually evolve into like a manager where you're hiring people to do certain things for your business. As business owners, a lot of us have that entrepreneur or what I kind of call the visionary role, the CEO role, right? For the most part in our industry, we're wearing 2 or 3 of those hats, right? It just kind of depends on the degree of comfort within those areas, right? And so me, for the most part, I gravitate towards the visionary role. I'm very visionary. It's why I'm a coach. It's why I'm a consultant, but also the worker bee. Like I love working with my clients. I've had staff, I love mentoring them, but management is not my zone of genius, right? So I'd rather be in those 2 roles, the worker bee and the CEO role. So that's how I see my role within my business.
Got it. Got it. It's so interesting to talk to different wedding pros about what hats they wear and what they enjoy, because as a business owner, especially just kind of starting or your first couple of years, you're everything from accounting to PR to marketing to customer service to janitor. So it's like top to bottom. And I'll tell you, my first company or person that I kind of hired out was my bookkeeper, and it completely changed my life. It's not something that I enjoyed doing or was good at doing. I like analyzing and looking at the metrics, but hiring out something like this or another piece of your business, so you're not wearing all the hats and doing what you're good at, kind of like what you're doing, I think is such a game changer in any business.
I tell people, I'm like, I don't love the bookkeeping either. I mean, I do it because it helps familiarize, but like, I don't love my own bookkeeping. Like, but like you, I love the information it gives me. It's why I'm not a bookkeeper, right? Because I love the strategy pieces of it, right? So like in that financial picture, I don't do tax, I don't do bookkeeping, but the actual like strategy piece, oh, I love that.
Okay, so let's get real advice from the expert. Let's talk about accounting systems. What do we need to know? What should we avoid? How do you get started? Like, just give us the whole scoop.
Yeah. So now that you know financial strategy is made of 3 parts, your bookkeeping, your taxes, and your strategy, you want to think about creating systems for those three pieces, right? So make sure that you have a system around your bookkeeping. If it's you need to sit down with your, last month of transactions every single month. If you're new to business and you don't have that many transactions, and I'm thinking like 30 transactions or less, then you can probably track stuff on a spreadsheet, track all of your sales coming in, your income coming in, and track all of your expenses and the types of expenses you have. It can be that simple to get started. After that, you want to create a system around QuickBooks. And again, this system involves sitting down for maybe 3 or 4 hours the first Monday of every month and just record keeping. It's just data entry. There's no magic behind it at the end of the day. So the second system you want to think about is taxes. Now, you're not really doing the tax filings, but just understand what write-offs you should be considering. And this is a conversation you can have with your tax accountant. In fact, right now, December 13th, probably a great time to have that conversation. Don't try to have that conversation with them April 14th, because they will not be happy at you, okay? So plan for it in the fall. And then your last system that you want to be thinking about is the planning system. So this is really where you want to be thinking, like, what is my business going to look like over the next year? Good time to do it is usually in the fall, and you want to set sales goals, and you want to create an expense budget, and you want to start thinking of how money flows in and out of your business. I like to create a cash flow plan, and you can find one on my website. Maybe I'll pop one in the link there. And that ties all of the pieces of your financial picture together.
Okay. So I know you're not a tax accountant, but working with so many different clients, have you kind of experienced any unique write-offs that people have done?
They're never really unique. I think what people really need to be thinking about is, for the most part, if you're doing anything for your business, like legitimately for your business, it's considered a business expense, and a business expense is a write-off, right? So this is where you get into your recording of your sales minus your expenses. Those business expenses are going to be what your tax accountant sees and, records that within your tax filings. I think the ones that people may not know about are things like, track your mileage. If you're going to client meetings or industry meetings or networking things or events, track how far that distance is between your home base. And if your office is at home, that's your base, and how long it takes to get there. You can use an app for this. You can use paper if you want. So at the end of the year, you will get a credit for all of those miles times a government rate, which I think right now is like 65 cents. Every year it changes. So that's one that people don't always think about. I'd also talk to the accountant as the use of your home as an office. It really depends on whether you own or you rent, other factors within your business. But that's a good question to say, hey, I work out of my home. Is there any write-offs for me? Those are really, I think, the big ones. The questions that I get are like, can I write off my rent the runway if I'm going to an event? Maybe it's a gray area. I think it depends on the tax accountant that you talk to. Some tax accountants are going to be like, yeah, go ahead. And some tax accountants are going to be like, no, don't do that. You're not fooling anybody. So at the end of the day, if your tax accountant gives you advice that is a little bit more liberal on that, it doesn't matter. Like, you're the one who gets audited.
Right.
So if you're nervous about being audited, then play it safe. But if you're like, play a little fast and loose, then play a little fast and loose, right? But it's up to you, right? How much you listen to your accountant or not.
I was just talking with this like super high-end luxury planner about tax deductions, and she told me that she writes off all of her like maintenance, her hair, her nails, her, whatever she does. And she was like, my accountant said that I am basically selling myself. I'm a product of the company, and so I can write it off. And I asked my tax accountant, and he was like, hard no.
So 100%. So
like
you'll see those two things. And I'm like, at the end of the day, who's going to get audited? It's my tax accountant. So
I know, but there are so many little things like that. So like you said, if in question, ask, and there might be things that, don't seem obvious as write-offs. So I would definitely bring those up because
100%.
it adds up for sure.
Yes.
Okay. So you talk a lot about giving yourself the title of CFO as a business owner, and it seems like so official,
people
but
are like, no, I don't want to do that.
I know. But it's precisely what you want more business owners to do. So what is a CFO? What do they do? And what do you want owners to do with that?
I want owners to take on this role. It's one of the many hats that we wear. because you ultimately are in charge of your finances, right? You can have a bookkeeper that does the bookkeeping for you. You can have a tax account. You can hire me to do your financial strategy, but ultimately it's your money on the line, right? So a good bookkeeper is going to look at you when they don't totally understand. Hey, I saw this. It's Amazon office expense, or is it, you know, event supplies, right? A good bookkeeper is going to go to you for that. Same thing with tax account. Me as a financial strategy, I'm going to go to you to think, right? And so ultimately you need to have that ownership of like, where do I want this business to go to, right? A CFO needs to oversee, needs to be the boss of these three systems, of these three people, for lack of a better word, even if it's you in these roles: bookkeeper, tax account, financial strategist. As a CFO, you're in charge regardless of the advisement you're getting, right? So what you just said, Nora, about like, you know, the tax accountant was like, here, you can write all this stuff on. Like, but as the CFO for your business, you're ultimately responsible for making the decision as to whether you want to take on the risk of that audit, right? It's not your tax account, right? And so putting yourself in that CFO role is about taking ownership. It's not about always knowing, right? Because you're going to hire a bookkeeper who's maybe a lot more familiar. You're going to hire a tax accountant. It's not about being the expert in these three fields, but it's about taking ownership of the entire financial vision. That's your role as a CFO.
Got it. Got it.
Yeah.
And then as far as you've talked about QuickBooks a lot, it sounds like that might be one of your favorite platforms. Are there
I don't think it's my
others?
favorite, but it's like the only that's going to like evolve and grow with your business, to be quite honest. Another one to look at if people really don't like QuickBooks is Xero with an X. I don't
Oh,
think, yes, I'm going to say the reports are not great.
hmm.
So I think I would only use it if for some reason, like your tax account, I've had clients at the tax account or their accountants, their bookkeepers require it, which is really unusual. But I don't know if I would transition to that if you're already on QuickBooks. I don't think it's an easier system. So sometimes people are like jumping into lots of things. Accounting software is accounting software. At the end of the day, it's going to have the same fundamentals that were invented 500 years ago when it was,
Right.
you know, paper and a pen and a ledger and those sorts of things, right? Um, I say that accounting software, and I use QuickBooks as the example because I think that it's probably the
Mhm.
best option for business owners. Um, it's software like anything else. It doesn't require a degree in calculus or trigonometry. At the end of the day, it doesn't even require math and subtraction because it's all done for you. But it's software that you have to learn how to use, like any
Yeah,
software. Like Adobe is complicated if you've never been trained on how to use, you know, Adobe design software.
sure.
So the same thing, I really, really need you guys to do some QuickBooks 101. You can find courses through QuickBooks. You can find courses through YouTube. You can find courses through your local community college. Take a basic course, even if you have a bookkeeper, just so that you can understand the elementals and honestly how like money is moving in and out of your business. It's the most important thing. Sometimes I get into a company that it was easy to do in the beginning because it was like 20 or 30 transactions. But when the business grows, they continue making
Yeah,
mistakes that were beginner mistakes. And then they have 10 years of books that are not accurate.
totally. Yeah, the
Yeah.
spreadsheets, that just makes me cringe a little bit because I feel
Mhm.
like if you have too much on there, it's just one little
Yes.
mistake is going to throw everything off.
Mhm.
And QuickBooks, I am right there with you. I think it's one of those things that like that's what I use for my planning company as well. And getting it set up was super daunting.
Yeah.
So I hired somebody to
Yeah.
set it up for me and to teach me how to use it because there's way more functionality on there that
Yes.
most small businesses
And you don't
need.
need
And
most of it. Yes.
so you don't
Yeah.
have to worry about it, but kind of
Yeah.
starting from scratch, they do demos and all those things, which I think are great to be a part of. But I got it all set up for me. It's super easy to pull in rock, paper, coin transactions. So everything is just really smooth and balanced.
Yeah.
Um, yeah, oof, accounting software.
No, necessary evil.
Yeah, right.
Yeah.
Okay, so let's talk about mistakes that people make. We want everyone on this call and in the future to be set up for success. So, what are some common mistakes that you see business owners making?
I think when it comes to like a financial strategy or money, sometimes people are taking on debt without really thinking about what their repayment strategy is. Now I'm going to be honest, like sometimes the reality is like debt falls into your lap because life happens and, you face, shortages and things like that.
Yeah.
Um, but I'm talking much more about when people kind of take a risk with that debt. And what I want people to be thinking about is like, how can you mitigate risk by being more strategic, right? Like, how can you create a calculated risk instead of like a blind leap of faith, right? And so a lot of times business owners they're making that blind leap of faith. Well, I'm just going to like take out a $30,000 loan so I can make this website. And like, if I build it, they will come. Right. And so I always tell people, I'm like, the purpose of having a financial strategy or having like, a 2-year financial plan is so that you're not going like this, so that you're going like,
Mhm.
I'm going to take on a $30,000 loan and this is what it's going to get me. Like, this is how it's going to help me grow their business, or this is going to be how it helps me scale, or this is a short-term investment, but look at the sales growth down the line, right? And this is how I pay it down, right? So you can take on big risks like that when you have, a plan, numbers in place that guide you. On the flip side, a lot of
Yeah.
business owners I find in our industry actually don't take risks. They hold back
Yeah.
because they're like, oh shoot, like I can't indebt myself, or I can't um lose money on this, or I don't know if I want to try that. I don't know if I can hire a full-time staff person to help me with this, right? Well, why don't you know? It's because you don't have any numbers to be looking
Mhm.
that to help guide you, right? So I think that's one of the biggest mistakes. That's not something, I'm going to be honest, that a new business owner comes out of the gates able to do. You
Right.
need a few years of experience to kind of know what your business is able to do, to kind of feel what your money might do as well. But when you're at that place, and this is usually like between 3 and 5 years, you're ready for some growth and you
Mhm.
need to see, how do I get there? That's the time where you're like, a financial plan is really going to help you so that you can feel comfortable with the risk that you take.
Got it.
Yeah.
Got it. Yeah, we were on a panel last week, and one of the questions that came up was about taking on credit card debt.
Oh, yeah.
And I saw you just kind of be like, "Oh no, don't do
I
that as a backup
know.
unless you absolutely have
Yes, I'd rather
to."
you take a loan. And again, like with a plan, it also depends on your business model. If you're like a
Right.
wedding planner, usually photographers, you probably shouldn't take on debt like that, just because you're selling your hours, so you're going to be on a treadmill to pay that down. It's a little bit different if you have a
Yeah.
business model that's like a rental company that can do high volume venues, catering, right? Like the scale of volume of events that they can do, but also of money that they see through the door is a lot higher, and they are able to kind of pay down that debt. A rental company, for example, is also acquiring assets, right? So
Mhm.
those assets have a long-term value of paying down that debt. So certain business models make more sense to do debt, but I wouldn't do credit cards. I would probably talk to the bank about doing a loan.
Yeah, got it.
Yeah.
Okay. Something else a lot of wedding pros don't consider is saving and investing. So, can you talk about what
Oh,
that
yeah.
looks like for business owners and how they get there or even kind of get started with it?
Yeah. So I always tell business owners these days to be thinking about saving 10 to 20% of their annual revenue. And the reason why is, during a recession, okay, so an established business, um, normal year, they haven't changed anything. They haven't really done any like major changes to pricing, maybe little hikes here and there. An established business will probably have about 10% growth. Like, this is a business that's been around for a while. This is not a boom economy. If it's a boom economy, we might see 20 or 30, right? But this is just
Yeah.
even steady 10%, maybe 20%, right? During a recession, you see the inverse. You see a business conceivably lose 10 to 20% of its revenue.
Wow.
Sometimes less, sometimes more, like, so many factors go into that. But if you have 10 to 20% of your annual revenue saved, that means that you don't have to cut and chop your expenses overnight when you feel your finances slipping. You probably have a year to kind of steady things out and figure things out if you have that reserve in the bank. Now,
Yeah.
that doesn't grow overnight. Like it can take several years to get to 10 to 20. 20% is a lot, right? Of your
That is a
income.
lot. That was my
It's a
first thought
lot.
when you said that.
It's a lot. It's a lot. So if you can get to like 2% in the first year, that's amazing, right? Like that's money that you didn't have the year before, right?
Mhm.
So like everything with baby steps, it may help to set aside a percentage of every sale. If that helps you do that, great, right? So if we're looking at that 10% of revenue as a goal, you would earmark
Mhm.
10% of every sale. If you know that 10% of every sale is just bananas, that's too high of a goal, set aside 1% of every sale or 2% of every
Yeah.
sale. And when I say set aside, put that in a savings account, a business savings account, right? I'd be looking at these days, there's, high interest, high yield savings accounts. Just Google it. You can find
Yeah.
lots of options. There's a lot more options than we had. Now that interest rates are high, they can work in our favor too.
Right.
Um, so yes, that's what I want people to be thinking about is that 10 to 20%. Some people will use 3 months of expenses as a barometer. I think that's a great barometer too. But to me, that 10 to 20% of savings really kind of addresses like the potential economic highs and lows that you might experience in
Mhm.
the business. Yeah.
Got it. Okay, so every business owner's dream is to do what they love and make more money, but you know exactly how people can do that. So share your secrets.
Pricing. It's all pricing. So many people are like, I spend too much money. I do this. Yes, maybe, but for the most part, 15 years of looking at people's financials, expenses is not the biggest offense that I usually see. In 95% of my businesses, expenses are pretty conservative or appropriate for the business model that they have. It all comes down to pricing, right? So if you can raise your prices even by 5 or 10%, that's going to make a significant uh, benefit to your ability to earn in the business.
Mhm.
Your overhead expenses, let's say you have overhead expenses, you're a wedding planner and it's just you $30,000 a year. For the most part, that's not going to change a whole lot. You may have some more assistants and things like that. So what's the factor that's really driving your earnings? It's how you
Yeah.
price your services at the end of the day.
Okay.
If you have costs, like for example, and when I say cost, it's cost of goods sold. So cost relating to any type of product, floral, stationery, you are selling a physical good that you purchased and repackaged to put out into the world, right? That's the other place I would look if you do have products. So floral designers, for example, sometimes they come to me and they're like, oh, I triple whatever my costs are, right? So I spent $2,000 on floral for this wedding, or that's my budget. I'm going to charge the client 6,000. I would look and
Mm.
examine if that's actually what's happening, because you
Yeah.
may be pricing it that way, but then what happens is you may be ordering extras, the just in case, the maybe, or oh gosh, 2,000, that's not enough for this beautiful room. Like I need to make it look good and full. It's my name on the line. And you end up gifting, right? So there's a lot of like the just in case buying or the gifting that happens.
Mhm.
And then that's where people are losing their profits, and those kinds of cost of materials.
Yeah. And also just the tools and all the wire and
Yes.
all of the different things and
Yes.
the extra labor you have to bring in
Yes.
to design or to deliver or to execute or whatever.
Yes.
Um, Yeah, yeah. I think so many wedding pros, especially now that prices for everything has risen, they're still nervous to raise
Mhm.
their pricing. And there are so many questions about, well, how much do I raise it? So how do you suggest someone even kind of starts thinking about that?
I don't think it has to be dramatic. I mean, I think everybody should be raising their prices every single year, at least 5 to 10%. And that's again, if you haven't had dramatic changes in your business. I'd say that if you've been in business about it's in that 3 to 5 year range,
Mhm.
that's where you've gone through like a huge growth curve, and you could probably raise your prices at that, 2 or 3 year mark, a good like 25, 30%. Um, every business is different, but what I tend to see is that in those 3 years, you've gained a lot more experience. You have a lot more key relationships that benefit your clients. You're a lot more skilled. You've invested in education. You've invested in branding. You're servicing a different kind of wedding. You're producing better quality, right? So usually in that 3 year mark, you can do a big jump way beyond that 5 to 10% minimum increase that everybody should be doing every single year. Usually with a big jump like that. And that jump usually happens at the 3-year mark. Sometimes again, at like 5 to 6 years, it depends on how big of a jump you made at that 3-year. And then definitely around like the 8 to 10 years in business, when you're just working with like really good clients and your reputation is just like the top of your market. Okay. So, usually with those jumps also come a change in your messaging and your communication and your marketing, your branding, right? You're attracting a different clientele. So you may not be working with the same clients that you did before. And again, that comes with your experience and expertise. You're able to satisfy a more demanding client is kind of what that comes down to.
Yeah. And if you're consistently booked and you can't take on more business,
100%.
raise your
Yes.
pricing.
Yes. If your conversion, I just had this conversation like an hour ago, like client had 50% conversion. I was like, that's great. And a lot of people would be like, that's too low. And I'm like, listen, if it was like 80% conversion, meaning, you've got 10 clients and 8 of them book, your prices are too low. Like you should not be converting that many clients. If you're too in demand, if you're already booked, I'm booked for 2024, people are already calling me for 2025. All of those are indicators that you need to re-examine your pricing. You're offering really great services that everybody wants, and you need to price appropriately for that.
Yeah. Okay. So there are a lot of different planning, accounting, bookkeeping services out there, but I found, and I'm curious what you think about this, that most wedding and event pros want to work with someone one-on-one rather than just an app or software and like doing it themselves. So what kind of questions should people be asking before hiring someone to manage kind of the financial piece of their business?
Yeah. Well, you definitely want to talk to some of their clients and find out what their experience has been. You need to ask also like what the services involve. I think a lot of times when somebody hands over like their bookkeeping, they just want the headache off their plate, and they're just so relieved that they're not asking difficult questions. And not all bookkeepers, like all professions, are made the same. And you could be handing your books to somebody that's not experienced. There's no degree qualification or certification or license that's required for somebody to say that they're a bookkeeper. So I would be asking them like what your monthly deliverables are. And you want to make sure, obviously, that they are adding all of your transactions, but then you want to make sure that there's some point in the month, and usually at the first week of the month or the second week of the month, where they are either sending you a list or having a conversation with you for all of the items, all of the transactions that they are not sure about. And the reason why this is really important is because a bookkeeper that's not doing that will often guess. And so, for example, the example of the Amazon, right? Like Amazon could be job supplies, it could be office supplies, it could be wedding supplies, it could be kitchen goods for your staff, like it could be lots of different things. In order to get books that tell you what you want to see, like information, you want to make sure that things are being recorded in the right buckets. Okay. So good bookkeeper is going to send you, hey, these are 15 things I had questions on, right? Like you paid a wire transfer fee. Was that for the rental inventory that you took on? Or were you, booking some, consultation somewhere, right? So a good bookkeeper is going to ask you these questions. Otherwise, they're going to guess. And I see a lot of bookkeepers that guess. And then at month end, you want to have them either send you reports or at least send you a summary of kind of like what their findings are. A good bookkeeper will send you a profit and loss and a balance sheet. Truth be told, you can pull up those reports on your own on QuickBooks. But it's usually like that, sense of completion that a good bookkeeper will have. They'll send you that even though you could pull it up yourself. Okay. And then, recommendations, making sure that the people that they do business for are happy with the work that they do. And that goes for tax accountants, for anybody that you're hiring, right?
Right. And I, to add on to that, I think regardless of who you hire, you can't just trust them blindly. You have to go in, you have to review numbers for the same thing that you just said. Like my bookkeeper, she's amazing. And, but she made a mistake and categorized a prepayment on my taxes as a member distribution, which are two totally different things, but it was an honest mistake. And had I not caught it, it would have been a problem.
Like, yes, you have to remember, like, bookkeepers will make errors, and that's fine. That's totally normal. But is there a system by which you can catch those? Like maybe they send you a
Mhm.
review of the transactions, or,
Yeah.
there needs to be some, way that you can kind of make sure that what's being recorded is correct. Yeah.
Right, right. So on this webinar that we were on last week, you were asked a question that I thought was so helpful, and I want to ask it again so everyone
Yeah.
can hear
Yeah.
it. What is the number one thing that you should be able to answer about your business and money?
Yeah. So net income is your income or your sales minus your expenses. That's the magic number. A lot of times people are like, I have a 6-figure business. I have a 7-figure business. Well, you can have a 7-figure business and 8 figures of expenses, and you're not doing so hot, right? Like, so I don't really
So
care what your
true.
sales are. I want to know. And at that token, like you could have a business that has, $200,000 in revenue. It's not 7 figures, and only $30,000 in expenses, and your net income is
Great.
170,000. If you're a sole owner, like that's your money, that's your
That's
income.
great.
Like that's a really healthy wage, right? Like that's a really healthy business, right? So that net income is the most valuable number in your business. I'm going to add one other thing that I didn't say was an important number to know. If you have product like floral stationery, you do need
Mm,
to know your cost margins and your profit margins. And what
mm,
that means is when you look at your profit and loss report, look to see what is cost of goods sold and then divide that by income. Okay, so let's say that your cost of goods sold, all the cost of floral last year was $40,000 and your income was $100,000. 40,000 divided by 100,000 is 40%. So you could
mhm.
say my cost margin is 40%. That's a magical number, because if you can shrink that cost margin 40, 39, 38, 37,
Yeah,
35, all of a sudden, where all of that is just additional profit to you. So those percentages, if you have
yeah,
product, are magical. You have to know those numbers.
yeah. That adds up real quick too.
Yeah.
Okay, we're getting lots of questions, but I would
Oh,
be
good.
remiss if I didn't ask you about your amazing conference that's coming up in February in Mexico. So can you just
Yes.
share with everybody a little bit about that?
Oh my gosh, I'm so excited. So B-Sage conference, we started that in 2014. So this is going to be 10 years. We took a couple years off with COVID. So it's going to be in San Miguel de Allende. And the conference is really to offer community and education to people who have been in business for about 10 years. And the reason why I have that specific target is that I find that the more experience you get in business, there's just less education out there for you. And your challenges are a little bit different, right? Like at 10 years in business, you may be
Yeah,
thinking, wow, I have 5 staff people, really need to hire a manager, director. How do I do that?
yeah,
Or I'm thinking of selling my business in 5 to 10 years. Like, what does that look like? That's something I'm going to be talking about. Like, you want to sell your business in 5 to 10 years. Like, what do you want to be thinking about now so that you're
hmm,
creating like a really robust plan when you're ready to exit? Things like Leah Weinberg's going to be talking about how to self-publish a book, which I love, because I think that if
Oh,
you're an expert in our industry, and most people at that level have a level of expertise, like you should be sharing that with other people. You should be putting that into the world. We have
very cool.
somebody coming, Anna, is going to be talking about creating personal wealth from your business wealth. So how to create retirement saving
Mm,
strategies, how to protect yourself with insurance and things like that. So anyways, it's going to be a really wonderful 3 days, February 26th through the 28th.
got it. And so how can people learn more about that?
You can go to bsageconference.com. I'm going to type it here. You guys can go check it out.
Cool.
Yeah.
Okay, questions. Are you ready?
Yeah.
So one is I'm new to having a full planning team and would like to know the best practices for managing staff payments. Also,
Mm.
best practices on tracking expenses and items typically missed by business owners that could be considered expenses.
Oh, yeah. Okay. So, first part, how to make payments to your staff.
Hmm.
Okay, so first of all, you want to be thinking about how they're classified, how your workers are classified, whether they are contractors or employees. For the most part in our industry, people should be classified as employees. But there's a lot of misinformation around where
Yeah.
people think that they can hire them as contractors. The biggest difference, without making this a whole staffing workshop, is it's not up for you to decide. It's not like you opt into one or the other. Like the IRS defines a contractor as someone who really works independently and has a level of expertise where they can run an event by themselves. So for example, like if you hired Nora to run your weddings on the day of the event, she would be a contractor because she's been a wedding planner for a gazillion years, right? Like she truly is an expert in her field. If you're hiring somebody that's fresh out of college and you need to train and guide, and you're telling them what hours they worked, you're telling them how much they pay, they fill out a timesheet, they're an employee. You are really guiding them and bringing them into the culture of your business. Okay. So that's the first thing you need to be thinking about. In terms of paying them, you need to sign up for some payroll software. And I'm going to recommend Gusto. I think Gusto is excellent. They
Love
make it really
Gusto.
easy. Gusto is amazing, right? Like they take care of that paperwork when you onboard a staff person. I think a lot of people don't take on employees because they're scared of that paperwork. They make it so easy. The other thing people are scared about with employees is tax. The reality is that as business owners, the federal tax is Social Security and Medicare. It's 7%. That's it. It feels like more because you're holding on to their withholdings, but that's not your money. That's their money. Okay. You may have a little bit of state tax and workers' comp depending on where you're at, but for the most part, it's 7% federal. It's totally worth to have that employee. Yeah.
For sure. For sure. Yeah. Gusto. I'm pulling up a link. I'll post it in the chat,
Oh,
but
yeah.
it's also really great for client facing. So, or for
Yes.
employee facing. So if they need a
Yes.
document or if they want to check something, they can log into their own portal. So you don't have to like constantly go in and, find what it is that they wanted. So really, really
Yes.
great experience for everybody.
Yes.
Okay, let's see. I am a newer business and in the process of updating my systems, workflow, packages, etc. Yay. Based
Yay.
on the growth I've seen. But with that, I'm experiencing growing pains from frequently trying out various systems and changing prices. Any consolidation tips?
Consolidation tips for what piece of it? The package? I
For
think
it
this is
sounds
your area, Nora, because this sounds like, I think you need rock, paper, coin.
Yeah, right. No, you definitely need a platform to run your payments through,
Yes.
whether that's rock, paper, coin or something else, something that automates reminders,
Client payments. Yeah.
and keeps everything all in one place. So if you're ever searching for a transaction or did I send that invoice or when is something due, it's all in one place. And it's a platform that you can really grow with. I promise I didn't plant this question.
Yeah.
but
that was going to be my answer.
I love
I was
it.
like, you need something that's going to kind of carry you through that client process. Yeah.
Yeah, and it's something rock, paper, coin. You are able to send invoices straight from the platform. You're also able to generate links that you just send in an email or through your workflow platform. So definitely check us out, and I will post a link for 6 months free in the chat as well. Okay, would you recommend LLC versus being incorporated when making a certain amount of money for tax purposes?
Okay. So, LLC is the way that you're organized within your state. And that's usually the best way to be organized, once you kind of have a business that you've been running, a little bit more than just, a side gig, which you could probably have as a sole proprietorship. Okay. So let's say you're an LLC, you're organized within your state. I tend to see that the threshold where it makes sense to file taxes as an S corp is usually $70,000 to $100,000 of net income. Okay. The way that works is you remain organized as an LLC within your state. So that doesn't really change. That filing is really simple, and you kind of want to keep that simple. With the help of your tax accountant, and the first 2 months of the year, you can opt to file taxes as an S corp. So they'll send you a form. A form says, I have this business. I want to file taxes as if I was an S corporation. And so what that does is that your net income, that's $100,000. You will now have to take a salary, a reasonable salary. Let's say it's $70,000. That now becomes an expense. You still have $30,000 of net income in your business after that salary expense. That net income of your business, you don't pay the Social Security and the Medicare on that. So you can save about, it's the self-employment tax, okay? And the reason why you have to reach that threshold is because your tax account will charge you more to do an S Corp filing, usually anywhere from $1,500 to $3,000. So in order to pay for that, you want to make sure that you're saving enough money in those taxes. And it tends to be somewhere between $70,000 to $100,000 of net income. In terms of a corporation in our industry doesn't usually make as much sense because, there aren't as many shareholders involved. You're ending up paying taxes twice. There's a tax benefit if you plan on losing money for many years. It's a strange tax strategy that I've seen. Sometimes businesses come to me with. But for the most part, corporation isn't where you need to be. Talk to your tax accountant about all of these because it's not professional advice for your specific situation.
I've heard a lot of people talking about having an S Corp, but being taxed as an LLC. Is that a thing?
No.
Okay, I didn't think so. I'm like, hold on. I haven't heard about this. Okay, I'm finding we're growing our venues in regards to our cost, and we are 6 years in business and usually always increase our pricing. I'm hesitant to keep pricing as is for 2024, but also feel like we do a great job and experience to not stay the same. So I feel like we probably already touched on this. Everyone should be raising their pricing.
I don't think you should be, especially as a venue. It's very much a given that you're going to raise your prices. I would say 10% every year. So, if not more, the cost to run a venue is all of our costs are increasing, but it's very different from like a wedding planning business that may not have hard costs increasing as much as a venue. Absolutely. I mean, just your, improvements and construction and things like that, upkeep of your property, contractor costs, all of those things have just become so much more expensive in the last few years that 10% almost feels a little too low for what venues have to keep up with.
Yeah. And the thing is, pricing has gone up for everything. Wedding industry and out. So you shouldn't be scared of it. Couples are expecting it. They're paying more for everything in their lives. So there's no reason why they shouldn't for their wedding. And if you're not, all of the other vendors are, from rentals to flowers to planners to caterers. So, and nothing says if you change your pricing, you have to stick with it. You can always tweak it after the fact. So maybe it goes up higher, maybe it goes up lower, or the more you get booked up for the year, maybe you really jack it up to fill up those dates. So it doesn't have to be a static number.
No, not at all.
Is there a best approach to budget setting for event planning businesses contingent on client bookings for revenues?
Well, you're going to have fixed costs or fixed expenses, right? So things like, marketing, all of your software subscriptions, all of those things, for the most part, they don't change whether you have 0 clients or 1,000 clients, right? So in terms of budgeting, you just want to be thinking about like, what is that monthly out that you have for like your fixed expenses? For the planning side of it, like the production side of your event, you have assistants. That's really just like the only variable cost that you have in your business. And so, that will change. If you have one wedding in July, you know that you have to hire an assistant for $500, right? And you can budget for that. I like to create budgets, and I said I'd pop in a cash flow template for you guys. I like to create a budget that shows me each single month so that I can, or a cash flow plan that shows me each single month so I can specifically plan for that month alone. What's happening in July might be very different from what's happening in January.
Got it. Okay. Somebody's asking about the best way to track mileage for taxes. You mentioned a couple apps. Do you mind sharing some that you like?
Okay. Maybe someone can pop, because I don't drive to clients. Everyone I work with is in other states. It used to be Mile IQ and Mileage app, but I don't even know those. That was a while ago. So maybe someone with more current knowledge can pop in their favorite apps. Honestly, just go into Apple apps or your phone's apps and find the ones with the best stars. Those are going to be the best ones. But used to be Mile IQ. I don't know. Is Mile IQ still good?
I think it is. I don't use one either, but I have heard of that one. Okay. Someone says, I would love to know the percentage of expenses most people use for education and experiences.
Okay. So I don't like tying expenses to a percentage of sales. Okay. Because you can have a business that's $200 million in sales. And I would never say that you should be spending 5%. Like that would be bananas, right? But you could be spending the same as a business that has $1 million in sales, right? So I prefer on like a flat amount that makes sense for your business, right? So, if your business is under 500,000, or I should say under $200,000 in revenue, maybe that education amount is 5 to 10,000. I can't isolate that without knowing everything in your business. You may not spend on advertising. You may not spend on other things, right? Honestly, you need to find what feels good to you. And at the end of the day, don't invest in education if you don't have the money. It's one thing to sign up for a course, maybe that's a few $100s and you put it on a credit card and you're, that it's going to give you like a little bit more, but I wouldn't be putting $5,000 into a conference on a credit card if you don't have, sales on the books for next year.
Yeah, minor detail.
Yeah.
Okay, cool. Let's see. Okay, we covered this. Interested in early quotes bookings for later events, how to price for profit, considerations for a catering business. How to price for profit.
For a catering business. Okay. So catering business, that's where you have to know that cost margin, right? Like where I see catering businesses losing money is they have their food costs and their labor costs for the most part. And then you have like, sometimes, hard goods and stuff like that. But look at all of those costs. You can look at them individually per wedding, but I'm going to be honest with you, like look at your P&L and calculate that, because granular by wedding, you're only going to get, looking wedding by wedding, you're not going to get that big picture. So print out your profit and loss for the last year and look to see like, what was my cost of food versus sales? That should give you a percentage, right? 35%. Cost of labor versus sales or income, that should give you another percentage, right? If that percentage, you put all those things together and you start to see numbers like 60% or 70%, like that's a pretty high cost that you're paying to produce events for your clients. You want to lower that cost. It may be a combination of like sourcing, from different vendors for your food costs. Oftentimes it's that price. That's what I've said. Like if you want to earn more, you've got to revisit that price. Catering companies these days have a really huge challenge because food costs have gone up so much. And sometimes you're going to look at the price that you need to. I was working with a catering client and it's like, it was $150, $200 a plate. We're like, okay, you need to be charging $280 or $300 a head at least to see a small semblance. And they were like, whoa, my clients won't pay for this. And it's like, you're going to have to rethink your marketing strategy.
Yeah.
You need to find a client who will pay for that. That or you change what you're serving.
Yeah. Right. Got it. Okay. So many good questions. We are already over time. So if we haven't answered your question, please message myself or Michelle and we'd be happy to answer for you. Michelle, thank you so much for taking the time to sit down and chat with us and educate us about all the important things.
Thank you for having me. This was really fun. Thank you everybody for being here and listening to all this money talk.
Of course. So make sure you follow us both on Instagram and share your handles. We'll do the same. They're in the chat right now. A little bit about Rock Paper Coin. If you are not a member yet, we really focus on proposals, contracts, invoices, shared documents. We make planning and booking easy for you. And we have the lowest processing fee you're going to find. It's only 2.5%. So I dropped a code for a year free in the chat. Please give us a try and we will help you with free white glove onboarding as well. And one last thing, Michelle, you're helping us finish out the year with our Money Talks webinars. And in 2024, we are changing it up a little bit. It is going to be called RPC Unfiltered, and we have some exciting things in plan. So stay tuned. We will fill you in. But thanks everybody for joining us. Thank you, Michelle. And we'll see you all soon.
Thank you so much for having me. Look forward to Unfiltered. It's going to be fun.
Bye.
Bye.